again, I wanna take a look at lots of different markets here today. So first of all, quick look at the Edge Finder's top setups page. Let me refresh this, make sure that we've got the latest stuff. Check this out. I've got positions already on gold and oil, both bullish positions that you guys probably saw me open up yesterday. I shared that on all my socials, as well as within the VIP group, that I went long gold and oil. Updates will follow in there if I inside the room, if I do make any positional changes to my oil position and to my gold position as well. So, overall, my thought process on commodities is based on what the Edge Finder's findings are here. So I'll show you, we'll go take a look at those trades. Let's go check how those are doing. So I mentioned I went long. Let's start with gold. Gold slightly up. This was actually the smaller of the two positions. My bigger position was on and is on gold. I'm sorry, on oil, and gold is the smaller of the two that I took. Price retested this supportive level, and my thought is that we could see a continued push to the upside up to retest this 2056 level, but it is not just a technical based trade. When the Edge Finder gives me a bullish read, I usually will look at the chart, and if I like the setup, then I usually will go for it. What really ticked me towards the bullish side was this COT data that we got lately, which was showing institutional money was pretty bullish, right? So we had some bullish shift into commodities. I discussed that at length yesterday. Here's the actual trade. I'll show you real quick. I have GLD open. This is the ETF that tracks gold. And so I do have this position open. We're up $350, but this is actually the least exciting of the trades here today. US oil is flying high, and this one's kind of the moneymaker this week. We're up $4,000 on US oil. Now, I feel like a broken record when I explain these trades. So let me say this, as I said, when I finally caught a runner on the S&P 500, if you guys saw me do that back in November. Before that, I took like 2 or 3 losses trying to catch the entry. So when I point out that this is my 3rd entry, please understand with context, I took some L's trying to find a oil bullish position. I think I was right. I think we still have more room to the upside on oil. That's my opinion. But my context here for you, which is very important if you're a trader, it's not about, how is your winners doing? Like, what are you doing to get into these sorts of trades? How are you managing risk to survive the drawdowns while you wait? Because if you don't think drawdowns happen to the best of best, I'm not the best of the best trader in the world, right? I wouldn't claim that. I'm not, if I was the best of the best, wouldn't I be managing a quadrillion dollars? Like, I don't really want that lifestyle and stress, but I do make money trading. And with context, every trader that makes money has to deal with not making money, has to deal with losing streaks and drawdowns, good, bads, the ugly. So I finally caught this move on oil. I've been really patient for it. When I first mentioned I was getting long gold and oil, I actually had a lot of people who were saying, thanks for the signal, I'm going to go short. Here's something crazy, guys. So when I have a losing streak and I hear that comment, that is like my beacon of hope. When people start saying, I'm just going to do the opposite of what Nick is saying, that usually signals to me 9 times out of 10, that's a signal that I'm towards the end of my drawdown. And the reality behind that is simply because people just, they get overly confident that somebody is right all the time, and they also get overly confident that someone is wrong all the time.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edge Finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So was I wrong a couple times getting into an oil trade? Absolutely. I took a couple losses getting into this trade, but at the end of the day, it doesn't matter. I was able to get my full size. This is my full position size on oil, and we're up $4,200 so far. It's not over. It could come all the way back. I'm not risk-free at all, right? I still have risk on the table here if oil comes shooting back the other direction. But that is my point. When everybody starts saying, you know, oh, fade this person's trades, and I'm not just saying me, because people love to do it about a million people on social media. Just be careful with that, right? If you think like someone is always right or someone is always wrong, you are completely incorrect. Everybody is right sometimes, everybody is wrong sometimes. What separates profitable traders from unprofitable ones is how you manage both sides of that equation. What do you do when you're right? What do you do when you're wrong? How do you manage risk so that you don't lose your butt when things are going poorly? So I mentioned I have a long position on silver, gold, and the oil market. And what's very interesting here is that all three of those, silver, gold, oil, institutional money is bullish. Let me show you some more examples. We'll go oil, silver, gold. Okay. So we just isolated the COT data. We made it so that you can manipulate individual assets. You can select your symbols for Edgefinder users. Select your symbols by just clicking that, of course, and you can look at just a couple at a time. It can be useful if you're just trying to specify. I'm very long commodities this week. I have a position open on silver, gold, US oil, and I should add Bitcoin. In fact, can we add that? Let's add Bitcoin to the picture. Can we do it? Yes, we can. Can we do it? Yes, we can. It's Bob the Builder. Bitcoin overall is a little bit more mixed. You can see the sentiment is a bit mixed, but you know, Bitcoin's on a tear here this week. I don't know if you guys have been watching Bitcoin at all. Maybe we'll cover that in just a moment. I've got a position. I'm up 30% in a month on Bitcoin. Small, penny-sized position compared to my other ones. I lack any remotely near conviction in cryptocurrency as I do in commodities, companies, and currencies, right? Those things I'm way more comfortable putting larger size on. But I have a small size on Bitcoin, and it's just been fun to watch. We'll talk about that in a minute. So we're looking at commodities, silver, oil, and gold, all institutionally pretty bullish. According to the commitment of traders data, which we've got here on our screen with the Edgefinder, COT shows 62% long on silver, 71% long on oil, 75% long on gold. The latest filing, guys, the latest weekly filing from the commitment of traders data showed an increase in all three of the commodities that I am long. Silver got a huge bid, I'm long. Gold got a huge bid week over week, I'm also long, and oil, I'm also long as well. That in combination with a technical chart setup that I really liked, I went long. Here's a quick look at retail positioning, what retail traders are long and short on. We'll do real quick, we'll just do major currency pairs for the currency guys and girls, the Australian dollar, USD CHF, these things. Retail traders are really long on these things. Dollar yen retail traders continue to be very short, and interestingly enough, notice something. Let's do dollar yen as an example. Also, why is this just slightly off base? Let me fix this. See that? There we go. Little on-air development. USD JPY. Let's go look at dollar yen really quick. I want to show you guys this. So the chart is moving higher, right? So USD JPY. And remember, retail traders we saw were really short. And look at what the daily chart looks like. This is something that you kind of have to, you kind of see over time if you watch retail sentiment. This is a consistent thing. When the market is trending up, 9 times out of 10, retail traders are shorting it, right? On the flip side, if the market's trending lower, retail traders are typically getting more and more long. They fight trends. That's the theme that we see frequently in the retail sentiment. That's just the data. We look at that frequently on the show. The Edgefinder considers it in its algorithm, so on and so forth. Flipper Trade says, forget free trial. I bought the Edgefinder Pro. What a game changer. Thank you very much for that review. I appreciate that. It absolutely is a game changer. I candidly say this. I think it's a tool that every trader should use. Have you guys seen Bitcoin? Oh my goodness, it's going crazy.
Yes, all of those.
I love it.
Those crypto companies too, doing very well.
Oh, Frank, which crypto companies are you talking about? You have, do you own any?
So I was mostly referring to the mining companies, so
yeah.
Marathon,
Mhm.
Iris, they're very correlated with Bitcoin's price. So seeing price go up is very good for those companies because they're essentially just mining
Yep.
cryptocurrencies.
We'll come to Bitcoin in just a second. Again, guys, we've got just about 10 seconds to consumer confidence. We'll roll our breaking news and come in right after that. We got all our charts here pulled up just so we can react to it. Consumer confidence should be dropping any second now. All right, NAS and SPX just got an immediate boost there, just slightly. Euro up, gold up.
It's down. Consumer confidence came in lower.
Okay, so consumer confidence. Big thing about consumer confidence is it is a cool indicator. It's kind of a forward-looking indicator. If you ask a bajillion people, hey, how are you feeling about your finances and your personal spending? That's pretty lead indicator stuff. So kind of cool to see, but again, came out just a little bit cool here. Revisions lower on the previous one also. So kind of a mixed reaction here. Indices bouncing slightly. Dollar index shot lower, came back up. Dow is down. Euro is down. Pound is down. Gold is slightly down. And oil just slightly off those highs. But I don't know. I just kind of an interesting mixed reaction. What do you guys think about the number? Is there anything there to hold on to?
I think it's going to be next week. Next week, non-farm. The week after that, CPI, PPI. We're getting through, month of February. I think there's going to be some earnings hangover kind of lingering in the markets. We've had a blowout earnings season with just big vertical moves. It was a wild season, and I don't know. I mean, I'm looking at the same charts you guys are, and I've got a lot of divergence indicators on my indexes, and I think a correction is nigh. I think we're going to get one pretty soon. Again, I say correction like literally 3 to 5%, maybe 5 to 8%. It's technically due, and I'm just curious. As always, it's like, what's the catalyst, right? I mean, the market doesn't like to go down without having something drag it lower, have a reason to attach to it. So that's what I'm curious of, like, what is the timing? The dollar index, I mean, yesterday's session, I literally set a chart alarm above and below the dollar. I'm not really willing to take any trades on dollar pairs until I see that chart alarm go off one way or the other. So
yeah, the dollar's been pretty quiet, Chris. And
Yeah.
the other thing I wanted to point out is I'm totally with you on the indices. I think that there's a pullback that's due. And I also want to clarify, I don't think you or myself, like, we're not outright bears on the market, but
Right.
it's a fair thing to say when something has just a real solid run up and kind of everyone is positioned bullish towards something, just to back off it and wait for those healthy pullbacks. I think I saw a stat that was like the average year has about 5% or more pullbacks in the S&P 500. We're almost 1/3 into the year, so it's perhaps, and we've had a huge run up February. I showed this chart yesterday. You might like this, guys, because I pulled this up. I thought it was really cool. Seasonality for the S&P 500. It might take a second to load here, but this portion of the year is historically one of the kind of underperforming parts of the year. Once my software will load, my computer's been taking a beating, Chris. I think you saw a little of that last time you joined with me, but it's just not liking all this stuff at the same time. Let's see if we can just pull up S&P really quick. I just want to show this chart. Okay, here it is. So yeah, so the S&P 500 has had a massive run since really November. And Chris, I know you've been a part of that rally. I was a part of it for a chunk of it. I've missed the most recent move. But if you take a look at the 10-year historical average of the S&P 500, we're going into a period of the year that is historically weaker. And is that a guarantee? No. Is seasonality like a perfect indicator? By no means. But if you followed it last year, you probably would have outperformed the market. It was really dead set last year. Got that fourth quarter rally, the whole shebang, pre-election year, all that good stuff. So I'm kind of with you. I think a pullback could be due. You're looking at the S&P 500. Do you think that there's do do you think this caused a bigger pullback? Or you kind of, and if so, where do you see it going to?
I don't think this in general will cause a bigger pullback. I'm
Okay.
also with Chris in that next week there's more news. Later this week there's more news. We have PCE, which is inflation. We have NFP next week, just a huge labor statistic that we have to pay attention to. I think this is building up and possibly suggesting, you know, worse numbers for those categories. And if we do see that next week, I think we're due for a bigger pullback. And we've been talking for partly this year that the markets have become way overextended to the upside. So we know that the market has to pull back at some point. And this sort of news event that we'll see in the future, in the near future, is probably going to be one of those catalysts. And if not, you just have to keep remaining cautiously bullish, because the market still goes up. It's still in an uptrend. We're still waiting on, you know, what could bring this down. And I don't want to be the one on the sidelines saying, oh, it's overextended, let's short, and then the market keeps going higher, or it's overextended, I'm not going to do anything. Which is why I like Chris's ideas on options. Although I don't fully understand his debit spread, just because options is still very new to me. I understand sort of what he's trying to do, which is defining risk and making sure you can still make money, even when the trade, if it goes against you, you can still opt out.
Exactly.
And
I like that. I was just going to add to you there, Frank. I like too that, you know, you pointed out, you both answered a really important thing here. Today's number, yeah, it matters, but the dollar's trading higher on two red numbers. So the point, however, is that I think it defaults back to the bigger stuff that is to come. The market is really paying attention to the upcoming stuff, as you mentioned, as Chris mentioned. And so now I want to ask Chris the same question, because so you have these options plays that you're planning out, but maybe defend just for a second the bearish thesis in the short term. What's your thought process on what could be? Is it simply just a sentiment trade? Is it a you know, economic figures are coming out a little weak? What are your thoughts? What's the reason behind the short term bearishness you've got, Chris?
One of my favorite indicators is just screaming at me, overbought diversion, overbought diversion. So this is what you can see right here. Nick, you'll appreciate this. This is one
That's
of
some
Rob
Booker
Booker's
stuff.
classic Maxville diversions,
know
right?
that.
We've all seen it. If anybody's been a follower the last decade, this indicator's been awesome. So I mean, I've used the same settings I've used in Forex, the same settings I've used in stocks. I've used this for years. You go back to, you know, daily, weekly charts. We've had tops and bottoms called and formed very quickly after this indicator prints. So what this is, I'll bring up this chart here because it's a little bit easier to see. So I'll show you the subgraph. So it's printing on my chart, but what it essentially makes up is if we are getting price going higher, okay, and we're getting overbought conditions, this is a relative strength index and this is a momentum oscillator. So a couple of things you look at here is price is making higher highs, momentum is disagreeing. That's divergence. We're also doing that from an overbought position with also hidden bearish divergence on the relative strength. Again, just purely technical. I understand that the markets can capitulate a little bit higher. We might go a little bit longer to the upside, but after NVIDIA earnings, I think the market just cools down a little bit. I think it's going to be a struggle to just keep pushing at the pace we've been pushing. Therefore, I think what we just experienced in the markets is we had this bigger move in implied volatility, and I think that's going to be shrinking. And so as an option trader, we had higher volatility and higher implied volatility, which means now if we start to cool down, that's a great time to be an option seller. That's a great time to collect the premium. And so in this example, I mean, I'm just staring at my charts, and I know this might be a little bit messy, but I hide those subgraphs, and you can see this is why I love this indicator so much. It represents everything that I like to see. I know that calling tops and bottoms can be very tricky, but in the event that this indicator prints, it anticipates those highs and lows so well that if you really want to wait for confirmation, just do this. Boom. Wait for that trend line to break, and that's your confirmation to get short in the SPY. That's your confirmation to get short in the Qs. And here's the review. It's like You can see it just as we just kept blowing through these highs end of the year and into January to kick off this year's melt up. SPY's printing overbought conditions with divergence. Go to the Dow Jones, printing overbought conditions with divergence. Go to the Qs, overbought conditions with divergence. The only one that hasn't done that is the Russell, right? And this is another interesting situation where it's like, are the small caps going to catch up and actually outperform the S&P or outperform the Qs? If they do that, they've got to get above 205. If they can't, then we're still in chop. We're still in this choppy zone, but the other major indexes have stretched a lot.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.